Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello, everybody, and welcome to another edition of the mentorpodcast.com. I have with me today Ari Page. We call him the Money Man. He's from Fund and Grow, and he's going to teach you where you can get a hold of cash. And that's what you're all about, aren't you, Ari? So
That's right.
Tell us who you are and what you can do for us and how important you are, will you?
Well, thank you for having me on, Ron. I really appreciate it. It's great to be here with you today. And
Yeah.
I know that you've have so many people that have tuned into you and learned so much over the years, and it's really propelled them. So really thankful to be here.
My pleasure, sir.
So Fund and Grow is a business credit card stacking company. So in short, what we do is we get folks access to business credit cards that can be spent on their real estate. It can be spent on any type of business. One of the things that we're good at is helping businesses to be able to spend their business credit cards, even if the place that they want to spend at doesn't accept business credit cards. For example, if you want to fund an escrow account, you can do that using a business credit card. And the credit cards are easily stacked. That's the great thing about it. You can get easily 50 to 75,000 within like a month of your applications. And then you can just do this process over and over. And we have clients that have, over 300,000, 400,000 of these business credit cards.
Okay, by stacked, you mean combination, use them in combination for one use? Define stacked.
All right, so the stacking process is actually pretty cool. And just to kind of break it down, let's imagine that you have a $20,000 Chase card, just a regular credit card, and you want to do the stacking process. It's literally this easy. We just go back to Chase, apply for another credit card. Let's say that they gave us that $20,000 1 year earlier, so exactly 12 months. So any kind of 0% offer that you might have on is expiring at that point. So we go back to the same bank, back to Chase, and we apply. Let's say they only give us 10 grand because they gave us 20,000 12 months earlier. So we take the 10,000, then on a separate call, we call the underwriter and we have them merge the two accounts together. So what was a $20,000 account and a new $10,000 credit card now becomes one $30,000 card. This is a card stacking process. And when we merge it together, we're merging the new 0% card into the account that was open longer. That way we retain the seasoning or the longevity of that particular account. And the only way to make that 20,000, that original credit card, have 0% on it again is to take a brand new account and merge it into it. That's the only way, without doing some type of balance transfer or moving the money, which is going to cost you. So the card stacking process in simple is applying at the same institution that you already have a card at, calling them, merging it together. You get higher limits, you merge it into their card with the longer seasoning, and now you can apply for more cards from that same institution 6 months, 12 months later.
So let's talk about the qualifications here. Number one, we have to have a company, right?
Yes, you have to have a company. The company is usually, that's the easiest part of it. Setting up an entity, an LLC, using a tax ID number in conjunction with applications, that's the easiest part of it. The most important part is that the business owner has good personal credit.
Okay, which means they probably have, to have good credit cards that you need, they're probably going to have good personal credit. So
That's right.
I got to have an LLC or a C Corp. In some cases an S. Our people are mostly LLC folks. And what are the other, I got to have any credit cards on existing banks in order for this to work. Is that what I just heard you say?
If you have personal credit cards that already have decent limits, that will help us get more on your first batch when we're going after business credit cards. So if you have no personal credit cards, then sometimes it can be helpful to first get access to some credit cards. And then when we apply on the business side, we tie the EIN number in so that the balances don't show up on your personal credit report. So although we're talking about your personal credit, it's important to note here, Ron, that these balances are not going to show up on the client's personal credit report. If they do, then the whole card stacking process stops. So there's one quick thing I want to interject. With my example of applying for a card, merging it together, I was given an example on the personal credit side. What Fund and Grow does is we do this only on the business side using the EIN number. That way the client can max out all 30,000 of that card or 20,000 of that card without it pulling their personal scores down. If we keep it off the personal credit report, then whenever we need to do this card stacking process, we need to apply for more cards, we need to continue the card stacking, then it's easy to do that. But if these cards are showing up on the personal credit and then they're maxing them out, that brings the whole process to a stop.
Yeah, yeah, probably brings your whole ability to borrow money to stop. To get too much of that on there, your credit score will take a dive. So when you do that, does the original loan I have on my credit come off of my credit because it's now attached to the LLC? You understand what I said?
So basically what we're talking about is there's personal credit cards and then there's business credit cards. When Fund and Grow applies for a client, we're going to be applying them directly for the business credit cards.
I got that, but what does that do to my credit report, the loan that was already on there?
Well, there is no, let's say that you already have 4 or 5 personal credit cards that you had before coming to Fund and Grow. You still have those personal credit cards. You're going to be able to use those on your house, on your home, for your kids, for yourself. But when it comes to applying for a business credit card, that's just a whole new loan. There are times that we can take personal credit cards and we can move those limits over onto a business credit card, which essentially takes it off your credit report. But for the most part, the credit cards that we're applying for are going to be new cards that are not that were never on your personal credit report in the first place, and it's just a new exposure, a new credit that you're being given to on the business side.
For a lot of folks watching, they don't understand uh, business loans, and I try to teach this to folks because that's how come I know most folks don't get this. By applying for a loan in an LLC, it has nothing to do with your personal credit report, regardless of what you're borrowing the money on. It doesn't show in your report because it's not your loan. It's the LLC's loan. And the only time it would affect you is if you don't pay it and you personally guaranteed that loan, even though it's a corporate loan. They're not going to, your name wouldn't even be involved in it unless they come after you personally. So are all of these going to have to be personally guaranteed, all these business loans?
Exactly. Yep. But they're not going to even show up on your credit report
Right.
unless you default for like 3 months in a row.
Correct. Yes. All right. So there's other rules, are there? For example, I just opened an LLC. Do I have to be in business for a while?
The longer that you're in business, the better it is.
Mhm.
However, there are startups that are getting access to hundreds of thousands of dollars of funding. One thing I want to emphasize, Ron, people do not need to lie or they don't need to present things to the bank other than the way it is. If you just started, if you're a startup, present yourself as a startup. It does not preclude you from
Mhm.
getting access to funding. It really is all based on how good your personal credit is.
All right. Yeah, I get that. I'll tell you what, Ari, I bet I get 5 to 8 calls a week from people trying to loan me money on the business, loan my business money. It's a very competitive market out there right now.
It
And
is.
as I talk to a few of them, and some of them say you need to guarantee it, some of them say you don't. So I guess it's up to the individual uh, lender that's
Well,
putting up the
Ron,
money.
what that's up to is it's up to the qualifications if you qualify. So your business is actually an income producing business. You're not a startup. You're going to qualify for corporate loans like Fund and Grow,
Yeah.
like the building that I'm sitting in here today, almost $2 million building. I didn't personally sign for it. I didn't personally guarantee a loan. I didn't get a normal mortgage for it. We got a corporate mortgage, just like you
Yeah.
maybe got for your beautiful location that I got to see a few months ago. So I don't know how you guys bought that, but if you did use a loan, I'm doubting that you personally signed
Yeah.
for that. So we want to help our clients get to that level of getting that type of corporate credit. But let's be real, our clients aren't going to get that yet. not until they have built up their personal or their business credit, not until they've built up their business revenues and they actually have something that they can present to the bank. In the meantime, what they can get access to very easily is hundreds of thousands of dollars of the business credit cards.
Got it. And some of them do have entities already. They're operating on some in real estate, some in other stuff. I guess it don't matter what they use the money for. Nobody tells them what they can spend the money on, right?
Yeah.
Yeah. When tell me about the interest rates on these things when you get them, give or take, from what to what, you know?
So when we're applying, when Fund and Grow is applying, we're exclusively applying for 0% introductory cards. That introductory period could be as short as 6 months. It could be
Hmm.
as long as 22 months. On
Hmm.
average, they're like 12 to 18 months. So after that, the 0% period, or after the 0% period expires, it could go up to whatever normal credit card rates are at, 12%, 13%, or even higher. And so with the card stacking process, we're not recommending anybody use the card after the 0% period is up. We're recommending going right into another batch, doing another application, doing another merge.
Well, if I were to use a card to close on a house, for example, I'm probably going to wholesale it. So frankly, I could have it turned and flipped around before my 30-day usage was up. So I don't have to pay interest if I pay it off when the bill comes in, correct?
That's correct. We have many clients doing exactly that.
Yeah. And then if I want it for longer term, I just got to pay interest for the time that I got it. So frankly, the amount of interest is not all that important because you're not going to use these to finance a property long term and put a tenant buyer in it because of the interest rates are going to be probably in the low 20s after that introductory period, aren't they? Give or take.
That's right. And many are using it not for the purchase of the entire property. They might have a DSCR loan or a mortgage or a hard money loan lined up for that, but they're using it for uh, in between, like for example, the rehab and for marketing and for running their office and for payroll and for a variety of things that you can't get a mortgage loan for.
Or for down payments and closing costs on terms deals where they just take over the loans. Yeah.
Yeah. And
Like,
another thing, there's a third party that we work with. They're called Plastic. And you can literally, you swipe your credit card with them and they will just send a wire or an ACH or a check to the escrow company for closing. They'll literally, you can just put money from a credit card directly into your escrow account.
hmm. So, what part do you play in this process? You're the one that contacts the bank and gets this done. Is that
So
right?
Fund and Grow as a consulting service, what we're doing is we are applying for the client and then we are walking them through our negotiations process where 2/3 of the funding comes in. So when we're looking at our average monthly funding of around 20 million a month, usually 5 million of that's from the applications and 15 million comes from the negotiation process of helping the client speak to the underwriter and
Mhm.
actually get to higher credit limits and do this whole merging process and so on.
I got it. Do these lenders, are these soft pulls or hard pulls on the credit?
So when Fund and Grow, when we look at our clients, we're doing a soft pull. And that soft pull is not going to leave an inquiry and it's going to be able to tell us immediately how much funding we can get for them based on the way the banks see them. But when we go and apply at the bank for the client, now the bank is actually has the ability to extend credit. That becomes a hard pull. Now, after they've done the hard pulls and we've moved forward on a batch, let's say a client's got 4 or 5 credit lines coming in, we then would recommend them to our credit repair affiliate that can help remove those credit inquiries. So some credit inquiries can be disputed and removed, not all, but even if we don't get them all removed, by the time we do the next batch, if it's like about 2 months, 2.5 months later, those inquiries won't affect us as much.
Okay. So you get all you can going forward, and the whole goal is to keep on applying a few months apart. Of course, that means we're making our payments when we're supposed to. Okay. Uh, to get to some point where you got a whole bunch of money sitting in your wallet or whatever on different. In fact, this is a good question here, Ari. Let's say I got three LLCs. When I apply for one, uh, yeah, what's stopping me from applying for all three of them?
So the common denominator here is going to be your personal credit.
I
So
got it.
you could have 5 entities, you could have 10 entities.
Mm-hmm.
They're going to look at you, that you, Ron, the total exposure of the owner of all of those entities. So again, if you have good personal credit, then they might extend you 200,000. That 200,000 could be broken up between 3 entities, or it could all be extended through one entity.
All right. Well, I'm just thinking out loud here. Okay, apply for one, and it gets a credit line on one. 3 months later, I want to use another one, and so forth. Do they see the loans to other entities other than the one that I'm using to apply with?
Yes, they will see all of the loans that is under Ron for all of your different businesses, but they won't preclude you from getting approved for it.
Hmm. Okay. So, what other qualifications do you need? For example, do they want to see income in that LLC?
Well, obviously, income is the best thing. So if you have income coming in, then we
Mhm.
can we can let the bank know that you have income. If you don't, then we have to do it as a stated loan. And so, which is great. We can do that, with credit cards. We can give projections, but we have to disclose to the bank that these are projections, that we don't know how much this business is going to make. So the more that the business makes, then the better it's going to be when it comes to getting approvals.
And from the bank's point of view, you're guaranteeing it personally anyway, so take some of the
Exactly.
pressure off of the entity supporting the loan. Uh, okay. I'm trying to think of what I'm supposed to ask you, Ari, and I know it's there. I just can't get it to come forward. Tell me what's the process of going through this thing? I hire you and you get going. What do I need? What am I going to have to provide to you to get to work on this?
Well, as crazy as it sounds, the only thing that we need from our clients is one thing, and that is to have a good personal credit score.
What do you
If you
consider
already have
good?
the entity set up, many of your clients already do, then they're going to be able to move forward even faster, because then there's no formation of entity, like registering and everything. But if the client doesn't have that, our process will actually walk them through that. We will help them with setting up an entity. We won't pay for the state filing fee.
Hmm.
Client has to pay for their own state filing fee, but beyond that, we'll actually help them set up an entity. The only thing our clients need to bring to us is a good credit score. Now, there's a lot of different links in the chain. So if you do have a good credit score, that means you'll be able to move forward on an application batch fairly quickly, which means that you will have funding rolling in about 30 to 45 days, because we're first going to look at the client's report, see if there's any positioning that we can do, then move forward on an application round. Then we do the negotiations follow-up process. That could take about 30 days. So the clients could be looking at having funding in hand within 30 days of their first batch.
Um, so give me a second here. I had a great question I was about to ask you. See, that's what happened when you start getting old, man. Okay. Um, Never mind. How do you get paid?
So we have 2 ways that we work with the client, and we
Hmm.
can. One of the ways is that we will do the work upfront for them, and then
Hmm.
charge them 8% of what we get. And I want to point out that if you look at the other credit card stacking companies out there, they are at like 10%, 15% of of charging what they set up. So if they set up 100 grand, they're going to charge 15 grand. So for us, we are charging 8% of what we get. So if we set up 100,000 of funding, we're going to be charging the client 8,000. However, we do have a way of limiting that fee. So we have what we call our membership. And our membership is a $3,500 fee that includes a full year's worth of credit card stacking. An entire
Hmm.
year's worth. Most clients are getting on average around 250,000 over that 1 year. So for 250,000, $3,500, and that's with the membership. Now, if the client doesn't want to pay up front, if they don't want to pay the membership, the 3,500, then they could use the pay as you go option, which means we will do the funding first, then charge 8% of what we get. Obviously, we're
Well,
charging a bit more on the back end. So if you want a good deal, and by the way, and as you probably already know, Ron, I just want to point out for the viewers, if you go to Ron's link at thementorpodcast.com/fund, and again, that's thementorpodcast.com rehabs.com/fund. You can see what you would pre-qualify for and how much funding you can obtain right away, as well as how much funding you can obtain over the life of the membership. That's where it's going to be at 3,500. You go directly to my site, to fundandgrow.com, and it's going to be at 4,000. It's at $500 more if you come directly
like
to
a
it.
no-brainer to me to do the 3,500 because that's way less than you'll pay with any loan you get them. I'm
That's
not,
right.
like you just said, just a measly 100 grand is $8,000. That is a one-time fee, isn't it?
Yeah, it's an annual fee. So we work with the client for 12 months. Many times that ends up being about 13 months. And then
Okay.
if the client wants us to continue, then we charge another
Okay.
3,500.
Now I remember that question I forgot. What do you consider good credit?
So anything above a 680 can be considered good credit. See,
Yeah.
there's times where I see a 680 that could get funded for 70 to 80,000 on their first round of funding. Then I see sometimes there's like a 740 that is DNQ'd, meaning they don't even qualify right away. So it's not just about the number, it's about how leveraged they are. So
Mhm.
sometimes there's clients that have good personal credit card limits, but they're just carrying a bit of a balance on those. And
Yeah.
sometimes just by rebalancing them to keep them all below 35%, suddenly their scores shoot up and we can move forward on an application batch. So we actually have what we call our pre-qualification tool, which is a soft pull, and a potential client can come to us and actually right at your link. What they can do is they can put their information, their name, their phone number, their address, and then we will tell them how much funding the banks will extend to them. We'll do a soft pull and immediately give them that number. Boom. It's going to be $80,000 to $90,000 you could get in 30 days from now.
Okay. Our link is below, guys, so you can just go there and find out anything you want to know. So it's not for everybody, but it is for everybody that wants to take that money and use it for something to make more money. And I want to point out these loans are not to buy cars and boats and toys with. They're to put it in money in anything that produces way more money than you're putting out, which is the whole basis of real estate, as far as I'm concerned. Real estate is the vehicle that generates cash, not the vehicle that sucks up cash long term. And here's an opportunity for you to, I'm just thinking of terms deals. My goodness gracious. Almost every terms deal I buy, I pay the closing costs because the seller gets little or no money. And sometimes I pay a small down payment. I don't ever pay a big down payment. But think about what's my exit strategy? It's to put a lease option tenant buyer into terms deals, which shouldn't take more than 30 days. Obviously, you're going to charge more on that front end non-refundable deposit than you're using to buy that property from the seller. So it's a quick turnaround for the cash. You put out, I don't know, 5 grand. I just bought one and it cost me $5,000 in closing cost, and I put zero down. The house is worth five and a quarter in excellent condition, and we bought it for 440, 100% owner financing. Seller didn't get any money. They were happy to get out and go, but I still had $5,000 worth of closing costs. And I run across people all the time. They're just getting started and they don't have the $5,000. And it just kills me to see them let good deals go down because they don't have a small amount of money to get started with. This is a way to fix that if you have good credit.
And
Good
to
credit.
add on top of that, Ron, like I know you've used all different types of loans throughout your career, from hard money to business, HELOCs, to all these different types of loans. Tell me one loan that pays you back something when you use it.
Well, any loan I get is that way. Okay.
Well, you earn something off it. You create an
Oh,
ROI, but
oh,
a business
yeah.
credit card actually gives you up to 2% cash back. We have some
Oh,
businesses
that's what
that
you
are
mean?
spending 50,000 or 100,000 a month on pay-per-click marketing or
Hmm.
on buying properties, and this is spending they would be doing anyway. And
I
when they
got
do
it.
that spending on a business credit card, they're getting rewards points, they're getting cash back. There is no other loan other than the generating of the ROI, like you're saying, Ron. There is no other loan that actually is going to pay you just for using it. Business credit
Yeah.
cards will. That's pretty cool.
Yeah. And this is not only infinity return because you don't have anything invested, it's infinity plus taking the money and turn it into more money. In fact, guys, this is a many things. It can be used for the terms of down payments and closing costs, bailing people out of foreclosure with money to bring their payments current. And also, when you're flipping contracts, yeah, many times you just flip the contract, you don't need any money. But even when you need money, you're probably going to be able to actually close on quite a few houses with the money that you can get on these cards. And even if they're just for a short term, sometimes, Ari, I actually close on them because I don't want to be in a rush to sell them. I want to get the maximum dollar out of it. But when I close on a junker that I'm going to wholesale, the money's not out there very long. And I don't even know how to measure the rate of return. It's so huge. In fact, your accountant's probably going to think you're crazy. There's something illegal about this when he sees your rate of return. So besides, there'll be all kinds of things that come to you. For example, I mean, can you use this thing outside of real estate? Of course, with caution. Make sure that anything you use this money for is strictly for investment, and you're going to get the money back quickly. You don't want to leave this 20% money into anything for very long. So it's not
Ron,
good for rentals.
I know that we have clients that are doing rehabbing all over. It's sometimes we're in a market that's new to us, and we might be using contractors that we haven't used before, just being in a new area. Tell me, what's a better form of asset protection than if I'm flipping a house, I'm putting a new roof on, I'm unsure of the contractor, but I decide to use my business credit card to pay for that roof. This is a real life example where the roof was red tagged, did not get passed. The contractor didn't care about the timeline of the investor. And they kept on asking over and over, come back, the county won't pass it, it won't pass, it won't pass. They didn't care. So we advised them, call your credit card company and charge back. So they called the credit card company, charged back on the roof charge. The same day or the next day, they were calling them like, what can we do to finish the job? We want to finish the job. So business credit cards can be a form of asset protection when used correctly.
I see a lot of people still using cash for most of their expenditures. For that reason alone, I use almost no cash because I have the ability to charge it back if I don't get what I actually paid for.
Boom.
And what people don't know that the credit card company, literally, you got 270 days to get that money back after the day you used it. Most people don't know that. Now, of course, you got to have a valid reason or they won't do that.
Yeah, you can't just
Point
get your money back without actually having a good reason.
So how many times are you going to run across houses that need repairs and have an underlying loan on them? This is a great tool for taking over that debt short term and then using your credit card to do the rehab and then cash it out. I definitely would want to cash it out because I don't want to leave that money buried in that house. And there's no way I'm going to go down to the bank and refinance it because if you do that, I'm coming after you. I'm going to hurt you because that's the worst thing you can do is go to the bank and guarantee long-term debt. I see so many people go down for that. Go out and borrow money at 80% value, like this Burr thing you to do. Get the money, spend it in 20 days, and now you got a 30-year debt with no money to show for it, and you can't make that up in volume. And people don't really understand, Ari, that when they're getting into this thing, that sooner or later that property is going to want some of that money back. And if you don't have it, that's the beginning of a downslide that could take you out of business. And I can't tell you how many times I've seen that. It's total mismanagement of money. And I'm making this point. I started way back in the 80s. I was using credit cards. One time I went out and bought some kind of a toy with the money, and it took me a long time to catch up because I didn't have the money to pay that thing. I spent the money, in other words, and I didn't pay off the debt. So I want to caution everybody, make sure you pay off the debt. You don't have to. See, that's the problem. Nobody's forcing you to do it, but you got to force yourself to do it. So
Yeah.
I see a lot of uses for this. How long do you think it takes from the time that I sick you on the bank before you actually get your first check or first deposit? Give or take.
So before the credit cards are available from the first batch, it's usually a 30 to 45 days. So if a client signs up and they're good to go right away, then within 30 days, they're going to have credit cards in hand. But if there's something that we can do to help bolster their personal file before we even move forward and apply, then we're going to do that. And that's where the 30 to 45 days could come in because we might need to wait for that to report onto the credit report, then move forward and apply. So
oh, sorry. Go ahead.
no, I answered the question. I tend to repeat myself, but 30 to 45 days.
So I'm just thinking, I want to use my credit card to close on a property. How do they get the money? I'm probably not going to take the credit card at the closing agent, whoever that may be. Uh, does that mean I have to take money out of on the credit card and then deliver the money to the closing agent?
So what we do is there's third party companies that we work with. And specifically, if I'm going to be paying an escrow account, then I would recommend my client get set up at a company called Plastic. So inside Plastic, it's the word plastic, but it ends with a Q. You can set up inside your account however many business credit cards you have. So you can add in one, two, three, four, five cards. Then you take an invoice from your escrow company and you upload it there. Then let's say it's for 25,000. Then you can say, I want to take 5,000 from this card, 10,000 from this card, 10,000 from this card. And then Plastic will ask you, do you want to do a wire? Do you want to do an ACH? Or do you want to send a check? The wire is like 2%. The ACH is like 1.5%. And the check is like 0.5% or something. I forget. So something like that. So there's a small fee for that process, but then they're going to send the money directly to the escrow account. And the important thing about this, Ron, is that we're working with the banks. We're not working against the banks. We're not going against banking policies. Like, for example, if I tried to pull the cash off that card
Yeah.
as a cash advance, that's going to be very expensive. And
Yes.
if I try to do any workarounds, then I'm going against banking regulations and policies. It's better to work with them than against them.
Okay. That makes sense. Now I'm getting it. All right. Okay. So what are other questions that you get asked that I haven't asked you yet?
Um, let's see. A lot of people want to ask how much can I get? Like, what's the maximum amount? And although we do have clients where I personally have received over $1 million of this type of funding, we have clients that have 600, 800,000 of this type of funding. On average, for one person on a 12-month period of time, the average is 250,000 of these types of business credit cards.
Yeah.
And they are fairly easy to get approved for, as opposed to what other people have gone through the lengthy process of doing other types of loans. So
That's a
it's
fact.
a
That's
it's
a
a
fact. Yeah. Very, very easy.
yeah.
These guys, I was impressed about easy, how quick it really is. All right.
And what we
Um,
want to do is we want to position the client for long-term fundability. There's a lot of credit card stacking companies out there that do this with your personal credit. And they're like, 250,000, that's nothing. We'll get you 500,000. And then they put it on your personal credit. They don't even get you 500,000, but it's all on your personal credit. And then when the client goes to use that, they become maxed out. They can't continue the card stacking process because it's not on, built up on the EIN side. So even for us, even if it takes us a little bit longer, it's better to keep that credit off the client's credit report so that
sure.
it doesn't affect their personal life and they can continue the refinancing anytime they need to.
Yeah. And frankly, that's a big key that people don't think about or just don't know. Uh, the more stuff you have on your credit report, the less lendable you are. And I can promise you, a bank don't care how much equity you got. As far as they're concerned, you got none. They do care how much debt you have and what your outgo is. And the more the debt you have, the less lendable you are going to be. And another thing you got to know, people they're building their real estate business around bank loans. They just don't know what they're in for yet. They haven't been in the business long enough to get cut off by the bank.
Yeah.
And of course, when a bank makes you a loan, they know every loan you got that's on your credit report. If it's not on your credit report, they don't even know it. By the way, if it's not your debt, you do not have to report it. Let me make that clear. This is an LLC debt. It does not show on your credit, and therefore it doesn't screw up your financial statement. And you're a lot more lendable not having personal debt. And I know you're thinking, well, I'm personally guaranteeing it. Yeah, but the personal guarantee doesn't make it your debt. It's still an LLC debt.
That's
And you're
right.
not obligated to report the debt if it's not on your credit report. Now, frankly, if you're going to go get a loan for something that you want to get, you do have to tell them about guaranteed debt because that's likely going to be a question they're going to ask you, and you do need to report it then, but only when they ask you to. So,
Yeah.
in
And
other
people
words,
ask often, do I have to pay taxes on that? And you
no,
don't pay taxes on borrowed money, only on
no,
earned income. So,
that's correct. And it's hard for people to understand why it's not my debt.
yeah,
Okay, if it doesn't get paid, they're probably coming after you personally, but if it's not your
that's
debt
right.
until you default on it, then it's your debt.
Yeah. And even with corporate credit, like when I bought this building, they would have to, if I defaulted on it, well, it's already paid off, but if I were to have defaulted on it, they would have had to sue me personally and then pursue me. It's a whole there is no automatic function in there when you're going after corporate credit. And that's
Right.
where we want to take all of our clients. So we start with the business credit card stacking, but inside the Fund and Grow program, all clients get access to our corporate credit program. We want to help people eventually to be able to buy the buildings that you're buying, that I'm buying, that don't require personal credit at all.
You want to know how I bought my building?
Yes.
I bought it in 95 and it was a bank foreclosure. And I got wind of it. They were asking 750 for it then. And it was vacant and a builder built the building. So I had, I offered them 550 and they accepted it. $5,000 down, no contingencies. And I had no
Wow.
idea where I was going to get the money. None. Okay. So I had a guy working for me who I was talking to this about it, and he literally said, well, I'll partner with you. He went and qualified for a 75% loan at the bank I was buying it from, and he put up the 25% down payment out of his IRA. And later I traded him some property to cash him out because I couldn't get a loan back then. In other words, I didn't have any money in it when I bought it. And here's the irony. I learned later that the bank was offered 700 for the house and they turned them down because it was contingent on them getting a loan to buy the property. Mine was contingent upon nothing at 550 and they took mine. So let that be a lesson to you, especially on commercial property. Get rid of all those contingencies you don't absolutely have to have and better chance of getting an offer accepted. All right, tell them
I
again.
love that.
I reach you by going to the link below. What are you going to do for me then when I get a hold of you? You got something you're going to
So
send them or what?
I just wanted to say, Ron, I just love that because so many other people in this same situation would have been like, well, I can't get that building.
Yeah,
And you're literally like, I didn't qualify for a loan. I didn't have the money, but you had the determination and you had the zeal and you had the wanting and you
yeah,
made it and you made it happen. And it just
yeah,
reminds me like, if you think about it, hundreds and hundreds of years ago, we're told that all like Americans were like, they were like farmers and woodworkers and traders. And so they
yeah,
were all taking their wares directly to the market, directly.
yeah,
Now we fast forward, a couple hundred years, and like 99% of the population works for somebody else. And
yeah,
they have these limiting thoughts like, well, I won't qualify for that. Well, I can't get that.
yeah,
I love it when people just bust past that and to say, there's always a way. Hey, you can freaking use credit cards. You know
yeah.
what I mean? Like there's always a way. So I love that.
I
But
bought a lot of houses on MasterCard and Visa, man. Back when
yeah.
I didn't have any money. I get it.
And we're
So,
so thankful to actually have access to
yeah,
other people's money here in America that we have loans
you
and
got
banks
it.
and stuff.
You got it. Now, I'm telling you, you're going to sleep better too. And I often tell people you probably even have better sex. That one I'm not sure of, Ari, but I got a good idea that would be the case. And it helps you make better decisions because when you're broke, man, you manage out of chaos and all kinds of stupid stuff you do, even though you know it's wrong. You do it anyway because of the chaos management, which is caused by a lack of funds. So just to have all this money in your back pocket is going to make you different when it comes out you're chasing properties. And I will tell everybody this as well. Whatever it is that you don't have, someone else does, as long as you make it worth their while, period. And I mean, I can't tell you how many projects that I've done where other people put up the money and they got rewarded in whatever way. I wouldn't give anybody a half just for getting a loan nowadays. By the way, I paid him interest on that IRA money. So I guess he got that, but he got half the building. But I traded him properties that I got deeply discounted. I traded them to him at retail price to get him out of the property. And then I went out and refinanced it at a later date on a 15-year loan, corporate loan, I might add. And 15 years later, it was paid off. So anyway, we can sit here and talk for hours. One more time, when they contact you through the link below, what are you going to send them? Are you going to set up a call or
So
what?
so once they go to the link below and they do what's called our pre-qualification, which means they're
Mhm.
going to put their name in, their address, their phone number, and we don't even ask for a date of birth or social security number, but we're going to
Mhm.
do a soft pre-qualification. So if they go to the link immediately, they're going to be able to see how much funding they qualify for. So then from there, they can automatically book a calendar, book a time to talk to one of our business development managers who will look at that pre-qualification and determine what's the best way forward to get them funding. Because not everyone's ready to move forward with funding right away. Some people need credit repair. Some people have to pay down their balances. Some people have to do some work first.
Going to tell them all that before they do anything else, right? That's good.
That's exactly. We don't want anybody to sign up. We have a 60-day money back guarantee. So we don't want to have to just sign up just to give you your money back. It costs us money. So we're going to do this pre-qualification on you first to determine your eligibility. And then if they're eligible, then they'll have funding within 45 days.
And guys, I would strongly encourage you, don't take the 8%. Okay. Take the $3,500. You're going to hate yourself later if you take the 8% and realize I could have got this for $3,500. And frankly, we used a $100,000 example. That's a small amount of money you're going to wind up getting out of this thing if you get good credit. So I'd take the $3,500 if possible. Put it on your credit card.
Yeah. Actually, our business development managers can even help you because they can see on your credit report. They can even recommend, like, hey, we recommend put it on this card because this is your lowest card right now.
Yeah. Okay.
So.
All right. Well, it's been fun talking to you. All right. I hope we have given people some good ideas here. I got nothing to lose by applying and see what he can do for you. So you might as well do it. We try to bring you the best qualified people in their respective niche in the marketplace, and Ari's certainly one of them when it comes to getting money. Now, if you're in my group, you've been trained already about private money, and there's no reason you can't go get private money as well. But this money you carry in your pocket, and you don't have to ask anybody for it. You just whip out your credit card. I have one more question for you. What exactly do they do when they do a soft pull?
So a soft pull is, for us, it doesn't look any different to the client. The client, once they go to that website and they put their name, their address, their phone number, it's going to give them a printout of exactly how much funding they can get. The difference between a soft pull and a hard pull is that it's not going to leave an inquiry on the credit report. So the banks won't know that you were looking for credit. It's not going to bring your scores down by Fund and Grow taking a look. Did I answer the question?
Well, I mean, so you're telling me they do or they do not look at the credit report, even though I don't know what they do. That's I've often wondered.
So as Fund and Grow, we're a broker. So we're going to be taking the client to the particular places that will approve them. So when we pull your credit, we're not actually extending credit. So we can pull it with a soft pull that does not leave a mark. But when a bank that does extend credit, like Chase, Bank of America, and they all have 0% business cards, when we apply the client there, that inquiry is going to stick on their credit report because that bank can actually extend credit. So Fund and Grow doesn't actually extend credit. So when we pull credit, it's a soft inquiry. Which is really cool because we don't want to leave any inquiries on the client's report. If you go to a mortgage broker that can actually extend you a mortgage and they run your credit, that's a hard inquiry.
Yeah.
It's not going to come off because they have the ability to extend.
Right. All right. Well, I appreciate you taking the time to spend with us today. Guys, go down to that link right now while it's still up. Get a hold of this guy. Got nothing to lose by doing it. And he's not even going to ask you for money unless he thinks he can get you a loan. So seems like a no-brainer to me. Thank you, Ari.
Thank you, Ron.
Soon. In fact, you're coming to the meeting at the end of January or September, right?
Yeah. Yep. I'll see you there.
I'll see you down there. All right. Thank you. Thank all of you for listening. I'll see you on the next broadcast of the mentorpodcast.com.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.